Well, hello and welcome to the July 2021 Wealth Advisory Top 10. I'm Brit and Ryle. This is Jason Williams. And we are here to regale you with our 10 best stock picks from the Wealth Advisory portfolio. Now, again, each of us are going to select 5 stocks from the Wealth Advisory portfolio. It's not a broad market selection. We limit it. And we tell you every month that this is not like an indication of stocks that we don't like because the stock doesn't make our top 10. Right. We're telling you the stocks that we really do like for the next 30 days, for the next
short
month.
Term. You know, we still like all of these stocks in the model portfolio long term. So we're really just, this is just sort of our way of giving you a little bit of help allocating your short-term resources. You know,
right.
If you're just coming on and you see these 32 stocks that we have and you're like, what should I buy? Well, these are the ones that we think in the next 30 days or so are going to have the most momentum, are going to have the most catalyst.
Right, and people do have, cash sitting around. Sometimes they like to trade for the short term, and if you follow our recommendations, you might have selected Lemonade, for instance, and made 30% like I did over the past month.
Brit had a really impressive month. Brit had Spotify, QuantumScape, Qualcomm, Lemonade, and Vitae. The only one that doesn't have a double-digit gain was Qualcomm.
Which is
amazing.
I know.
And honestly, if you give it a couple
sense.
more days, it might have a big gain coming up on it because they just released that Snapdragon 888 chip.
Oh, okay, cool. Right.
So that's going to look good for them. I have the opposite. I have 5 stocks and only one of them's a double-digit win. So all of our stocks were winners this month, which is great. We love seeing that.
All 10?
Yeah, all 10 were positive this month.
Real good.
Not all of them beat the market, but on average, both of our averages just slammed the market.
As we've talked about, we've been seeing these like sector rotations. You go from tech to basic materials to, financials or whatever. Mm-hmm. And so, I went tech heavy for June, and it turns out that was the month that the sector rotation kind of came back to the tech stocks, which was which was all part of my plan.
I knew it was going to happen.
Well, it is a kind of thing where a lot of times you don't ever want to say, oh, well, that stock's been sold off enough. Mm-hmm. Because, that's like akin to catching the falling knife, trying to bottom tick a stock. It can be dangerous. But just the way this pattern's kind of gone, you see techs drop as much as some of them have. Chewy, for instance, which you had last month, correct?
I did.
Yeah.
It came back 8% last month.
But it had gone from 120s down to even in the upper 70s, didn't it?
It actually got down into the lower 70s.
Jesus.
Yeah.
And that's when you can say, knowing the fundamentals of Chewy, that stock has sold off enough because the value is just too glaring.
Yep.
And it did work.
It came back. I got in around 75. It's a little bit above 80 today.
Well done.
And I think that we said that, and I think I actually said that last month when I picked Chewy. I wasn't expecting Chewy to be a huge gainer that month,
right.
But really it was just the fact that Chewy had sold off so much, and I'm so adamant that everybody should have this stock in their portfolios that that's how adamant I was going to put it in the top 10.
Right.
And I really still think at $80 the Chewy's too cheap.
In
the
agreed.
long run.
Agreed. And yeah. As a general rule of thumb, for our little contest here, I figure if I can get 10% a month out of a stock, I will win. Like that's kind of my my target. Like I don't look for who's going to the moon, who's going to double in a month. I figure 8-10%. If I can do that in a month, I'll probably be looking pretty good.
Yep.
And and that's a reasonable expectation. And in fact, it's probably an aggressive.
Yeah, that's what markets usually average for a year.
Right. Well, that's because, and this gets to a question that I'm going to ask you here in a minute, which I'm going to surprise you with because I didn't prep you for. But yeah, many stocks that we pick do much better than that 8 to 10%. The indexes struggle because of additions like Tesla, for instance, into the S&P 500. So I wanted to ask you, what do you think is the most egregious addition this year? GameStop into the Russell 3000 or Tesla into the S&P 500? I have opinions on the matter, but I know it's a tough one.
It really is. It really is because I have my feelings on both.
GameStop's about
is where
about $15 billion
is because GameStop's been part of a game that's being played right now.
Well played.
And that sort of makes me wonder if it's really wise to put it into that index.
Well, the CEO of Chewy sits on the head of the board for GameStop.
Right? Yeah, the founder of Chewy.
Which is a genius.
Uh-huh.
And
Which could bode very well for GameStop. It definitely could. I think that I've always said that GameStop does have some fundamental value to it, but it doesn't have the fundamental value that
they do a decent amount of revenue. They just can't make money at their revenue, which is kind of like you want to make money in the business, and when you're not,
yeah, exactly. And when you're bringing in that much, spending that much is kind of scary.
It's about $5 billion a year.
On the other hand, Tesla only qualified to make the S&P 500 because it sells carbon credits.
Essentially,
Tesla's profits, the profits that it had to have to make the S&P 500, all did not come from selling cars, did not come from making batteries, did not come from what that company does. They came from carbon credits that the company can sell, that the company won't be able to sell forever.
The thing I wonder about it is that in the case of Tesla, especially. And I don't want this to sound like paranoid, tinfoil hat kind of stuff, but think of the interests that own Tesla right now. I mean, Kathy Wood is probably the headline in that regard, with her ARK funds, but
become one of the biggest shareholders.
But hedge funds, even some of your index funds, your Vanguards and Fidelities. I mean, they're going to own a fair amount of Tesla, and they want. What's a better way to protect your interest in a really large company with a somewhat questionable future than having it added to the S&P 500, right? Mm-hmm. Because then your Vanguards have to buy it and your Fidelities have to buy it. And so I really wonder, I feel like this is like a FIFA scandal, like the soccer scandal from years back where, the judges were bribed. I can't help but wonder if that's why Tesla got admitted into the S&P 500. It's really hard to find, an analyst that will tell you 10 years from now Tesla's going to be still sitting at the top of the electric vehicle heap. You know what I mean?
Yeah.
Because, the competition's coming from everywhere.
From everywhere.
And when the sales...
And from better capitalized companies now, too.
Well, and perhaps better, manufacturers. At least companies that aren't learning how to manufacture cars from scratch, from the ground up.
Yep, the number one EV last year in the U.S. was the Ford Mustang.
Really?
The Mach-E, yep.
Really?
And actually one of the lowest...
Sold in the U.S.
One of the lowest rated, as far as quality cars were concerned, was the one of the Teslas.
I believe it.
And I feel like Elon Musk himself really said, if we're ramping up production, don't buy a car.
Well, and...
There's going to be problems with that.
Well done.
I mean,
well
good
played,
for
Elon.
him for being honest, but at the same time, that's not the kind of honesty I want out of my CEO.
I know. He's going to start making cookies for everybody again. And, honestly, that new... Tesla, the $35,000 one, is honestly one of the ugliest cars I've ever seen in my life. That front end, just put a bumper on it. It looks ridiculous. I mean, it's like, you remember the Breaking Bad car, the Aztec, that he drove? That probably classifies as the ugliest car ever made. And I think this Tesla, which is the M, so they call it, is giving it a run for the money. Yeah, that's an ugly car.
That's tough. That's tough.
When you get the stylized Beamer or
I don't know.
Even the Mustang.
I'm gonna say, as far as ridiculousness goes, I'm gonna say that the GameStop and the Russell 3000.
Yeah. I
think that one takes the cake because that one we can all see exactly why that stock is where it is, and it's not because of the fundamental value in the company. Tesla being in the S&P 500, there is some fundamental value there. Maybe Tesla's overvalued.
It is.
And maybe, maybe it should have, maybe also the S&P 500 does have, kind of tight restrictions for getting listed there.
Yeah.
But at the same time, you can see that there is some value in Tesla.
Right. Yeah, sure.
And if in 10 years Tesla's, not still at the top of the heap, it's probably still going to be around. But will GameStop?
That's a fair way to look at it. A year ago, not even a year ago, in October, GameStop was like a $300 million company, 280 something like that, $15 billion now. And on what? I like the Chewy guy. I think the guy's an incredible CEO, and the strategy they put forth as being so customer service oriented is a real revelation. And you're seeing a lot more companies really focus on that customer for life idea, which is one of the reasons that we like them so much. I think our portfolio is riddled with that kind of stuff.
Oh, definitely.
Companies that really see that lifetime value, and they're not going to squeeze you for every last nickel because there's a lot of nickels they won't get if they
because they want you for the long run.
Right.
Exactly.
Right.
Exactly.
And the internet, the online makes it so easy to jump ship, so much easier than
definitely to not
than
have
it has
brand
been.
Loyalty.
Right.
Definitely true.
Right.
Definitely true.
And you're establishing brand loyalty for the biggest and wealthiest generation in the millennials. And whichever one it is.
Interesting. Speaking of customers and the internet making things really easy, I've been looking for pet insurance for my dog.
Oh yeah.
And Lemonade.
What are you gonna have him knocked off? You want to get life insurance and then kill your dog?
No,
that's terrible.
I don't think they offer life
Can't believe you
insurance
would say that.
If they did offer, I'd totally get the life insurance. There would be a lot of suffering here when you
go jogging in the street.
But no, health insurance, and honestly, Lemonade has some really good offerings, so I may end up being a Lemonade customer as well as recommending.
See how that works.
I'm not just the president of the Hair Club for Men.
No, you're not. I am actually.
But all right, I feel like we've talked a lot. Let's get into what the people are really watching this for, and we'll go over our picks. So the way that we do this, Brit explained that both of us will take 5 stocks. We sort of make it a little bit interesting. We do it kind of like a fantasy football draft, where I'll pick one, he'll pick one, I'll pick one, he'll pick one until we're all lined up. But what we've also done to give the person who lost last month, whose stocks didn't perform as well last month, a little bit better of a shot, is that they get to go first. We're allowed to keep as many as 3 of our 5 stocks, but we have to have at least 2 replacements.
Right.
And so since Brit soundly beat me last month, I get to go first.
And funny, we have to review these rules every single month, and it's not just for our viewers either, because
it's for us too.
Yeah, we have to. We kind of
we'll forget. That we're clear.
We'll forget. And yes, I did win. It was a great month. I'm not.
Yeah, Brit had just.
I'm not a gracious winner.
13%, 30%, 20%.
30. Not a gracious
30%.
winner. I'm not a nice person at all.
No.
Just
I hate losing to Brit, to be completely honest, because he's going to rub it in all month. And he's been rubbing it in all month so far.
Man, I sent you a text like 3 days in. I'm winning.
He'll send me screenshots every once in a while, yeah. So hopefully I could do a little bit better this month. And so since I lost, I get to go and I get to name my keepers. Wow, man, this is tough. This is really tough. I think I'm gonna keep innovative industrial properties. I like them. Back to sort of what Brit said, where he's looking for the 10%, not really the moonshots, and I think that we can get a good 7 to 10% again out of innovative industrial this month.
Mm-hmm.
They keep adding properties, they keep boosting our dividend. I really like them. I think people should continue to build their position in this company, and as I've said before, once they get into my top 10, they usually stay there for a while. So we're going to stick with them this month. In the hopes that maybe we do have a little bit of a rotation back towards basic materials, especially seeing the infrastructure package likely to be getting passed by Congress.
I mean, politics these days.
It's silly. Because I remember 6 years ago.
It is ridiculous.
I remember 6 years ago or 5 years ago, Clinton and Trump were both campaigning about infrastructure packages, and one wanted $2 trillion and one wanted $1 trillion, and we couldn't get that. And now we're fighting over $2 trillion or $1 trillion again. Well, but it looks like the infrastructure package is going to go through. It's obvious that we do need to upgrade our infrastructure, and it would be it would definitely be a boon to some sectors.
The Senate won't pass anything, and so Biden, anything,
mm-hmm.
and so because it just sits on McConnell's desk, that guy, and so Biden's gonna take what he can get. And then his party's mad at him because he won't try to hold the Republicans' feet to the fire to get everything. And it's like, oh my God. Isn't politics supposed to be about compromise? I mean, this stuff really drives me nuts.
It's supposed to be. I feel like a lot of people miss the point that the end of a successful negotiation is both people being upset, like both people feeling like they got ripped
won,
off.
Right? Or both people feeling like they won.
They lost. Yeah, really. Like nobody walks away from neither party walks away from a successful negotiation feeling like they won.
I know.
Typically, and I think that's something that our politicians are missing, but. It looks like we're going to get the infrastructure, because that's one thing that we can agree on, is that we do need, some sort of infrastructure renovation or whatever. Absolutely. And we just can't agree on how much it should cost.
Money needs to be available for apartment buildings in friggin' Miami that fall down and kill a bunch of people.
Very true. Definitely need money available for that. We're going to need money available for renewable energy and things like that. And so I'm going to stick with Albemarle.
Yes.
In the hopes that we get a little run on basic materials and on their lithium.
Well, and that one's just such a solid macro play too. Just you know what I mean? I feel like they almost don't even need political incentives to move them along. I believe that we've hit essentially critical mass on on electrical vehicles, and that there's we're not trying to.
And just electrification in general. I'm thinking about adding solar panels to my house. If I do that, I'm going to need a lithium battery or two in my basement to hold that energy so that I can use it when the sun's not shining.
And you'd never want to just like have a weekend off and not do something, right? Paint your stupid boat or like rewire your whole house.
That's
Whatever.
what keeps me sane. It keeps me sane. It's meditation for me. So we're going to keep Albemarle, we're going to keep Innovative Industrial, and I've got the opportunity to keep one more. I have 3 really good stocks here.
Do you though? But I mean, don't you want mine?
I mean, I kind of do, but at the same time, after running that much, I don't know if they still got legs this one.
Whatever.
They probably
Winners
do.
keep running. That's how it works.
Winners do keep running. So I'm gonna keep I'm gonna keep Chewy.
I think that's.
I was thinking about keeping Twilio, but Twilio's getting close to 400. I think it could get up above there. I definitely think it could get up above there. I think the Twilio can get up to $1,000. Eventually. It's a really great company, but it had a good run last month. It got me that 16%. And if we are going to have sort of a rotation, if this pattern's going to continue to follow itself, then Twilio might not be the best bet for me. So I really like Chewy. I think it's got a lot more still to come back up. And we're getting into earnings seasons in 2 weeks, so maybe we'll see some really good news out of Chewy and their customer retention.
It gets considered a tech stock, but I mean, it's a tech stock in the same way that Amazon is, and that it's really it should be consumer discretionary, and not so much a tech stock, which I guess it probably. is.
Amazon gets lumped into tech stock because of AWS,
but they're not even; they're
the money
consumer discretionary.
But like they really are. This is a retail company. They're an online retailer. They sell pet food and pet products, and a lot more people have pets this year than last year.
Right.
And so I think that Chewy's a good
I
one.
know. I have more pets. I've gone from 0 to 1.
Yeah, exactly. Brit doubled. I doubled. That's more than doubled.
Right. Nice.
But yeah, there's a lot more pets out there. I really think Chewy's going to do well. So we'll keep Chewy, we'll keep Albemarle, we'll keep Innovative Industrial. Those are my keepers. Brit, the floor is yours.
Yeah. So, we're coming up on earnings season. Did you know that? It's a couple weeks away.
I just said that.
You did?
I did.
What was I doing? I was thinking about
Not
something
listening
else.
to me.
Oh, right.
It's
Yeah,
good to
apparently.
know.
Like I ever do. I do listen to Jason. He's very smart. Just kidding. Sorry.
He doesn't listen to me all the time. I'm constantly talking.
I'm sorry, what?
Too much.
It's true.
But anyway, your picks, sir.
So earnings coming up. We had a blowout last one, right? 85% of companies beat by an average of 20%, 19%.
And they're talking about it being even better this time.
I know, that's what I'm saying. And so you have that, right? So we're gonna do better coming up in a couple weeks, and the Fed is getting more sort of like open with floating the ideas that their official interest rate tapering, whatever. Schedule is probably going to be accelerated, which I mean we've been saying, we've both been saying that for months now that, given the trajectory of recovery and all that and economic growth, they're going to have to move. They're simply going to have to.
Yeah.
Oreos are way too expensive. I don't know if you knew that, but they're like almost $6 a thing. I just happened to notice that.
Just wait.
I didn't buy them.
The tube size goes down.
Say what?
The tube size goes down. Shrinkflation.
Oh my God, that is the most. It's insidious. Absolutely, it's like they think we're stupid. You know what I mean? It's coming. When I really see egregious examples of that, I stop buying. I'm not a customer for life for anybody. So cookie makers,
20-ounce
be
sodas
warned.
become 17.9-ounce sodas.
And where do you get factories that make the smaller bottles? Like, don't you have to retool a whole factory to go?
Think.
I mean, yeah.
I don't know that much about plastic bottle manufacturing though. So.
Yeah, I'm totally speculating and trying to sound authoritative as I will. Anyway, so if we're heading towards like what may be, and it's kind of looking like it might be like a peak earnings season, and the Fed is accelerating its interest rate and especially tapering plans. They're going to do it sooner. The market is not going to like that, right? I mean, you just know that it's going to be a replay of what happened last time. Investors, the big money's keeping the balls in the air right now, which I mean, it's kind of like, it seems like fiddling while Rome burns in a way. Just in that this catalyst is coming, like that the market's going to sell off 20%.
Oh, definitely.
but you're like, oh well, that's in the future. That's next month.
It's that
this
musical
month.
chairs. You know there's
Right,
going to be a chair
right.
missing when you go to sit down.
Right.
You just really hope it's not yours.
And we already saw this last earnings some reaction to earnings. It didn't, stocks didn't just rocket. They had already priced in so much.
Stocks seemed to really rally going into their earnings,
Right,
and
they
then sort of
did.
sold off
They did.
afterwards.
And
sort
I
of
think
like a relief thing.
I'm thinking that we see a replay of that, and it might even be worse this time around. So I'm definitely expecting this earnings season to be like a sell the news type event. I really think that I mean, if you've got billions and billions invested, I mean, you have to start taking some off at some point. You just simply have to.
Yep.
And
Or at
and
least
I
be
think
tactical with it. Make those tactical.
yeah, well,
short-term
I mean,
moves.
ultimately it will be, but you still have to pair. You still have to take some money off the table, and I think that's going to happen this time because it's it just seems too obvious not to. It just seems too obvious a time, too advantageous of a time not to do that. So I'm gonna try to adjust a little bit in anticipation of that, which means I'm going to let Lemonade go. I really thought that. Lemonade was going to kind of peak out at 100, right? I didn't think it was going to clear that level so easily, and it did by better than 10%. Like it launched, launched. So I'm gonna let that one go by the wayside, and what else am I gonna do? I'm gonna let one other one go. I guess I'm gonna let Invite go.
Okay.
I did okay.
Those
on
two
it.
both ran up.
I did
Invite up
okay on
20%
Invite.
there.
Yeah, okay. So yeah, I'm gonna let my two biggest. Then I'm gonna keep Qualcomm, Spotify, and what's that one? Are you looking at?
QuantumScape.
Oh, QuantumScape. Yeah, I'm keeping QuantumScape because that's actually
Yeah, QuantumScape's right around $30 now,
Yeah.
and
Yeah.
it's got the potential to heat back up. I think.
Agreed.
Yeah.
I just the whole like negative views on the SPACs these days seems kind of weird. Like okay, so the structure it might be a little questionable. The prospectus requirements are definitely a factor, but I don't think those apply in the case of QuantumScape. I don't think you need to be suspicious.
I think in the
of their
earlier
technology.
stage, like the earlier SPACs that we saw last year, that those are sort of in a different class than the ones that
'Cause
we've
they were
been
the cream of
seeing
the
since
crop.
then.
They're
Because
the cream of the crop,
exactly.
right?
Now we're sort of getting to the point where they're kind of taking anything. They're looking for two companies to combine together that makes sense
Right.
to buy with the
Right.
with the SPAC.
Right.
SPACs that were supposed to be for leisure or investing in like medical.
Well, because they have a time frame.
They have a time frame.
Most of them have
2
like we
years.
have to be invested by 2
Yeah,
years.
They have 2 years, and
and
they
they're
have to
probably
give the money
starting to
back,
pay.
and they have to give the money back plus interest.
Oh, really? Yeah, they're not going to want to do
Because
that.
it goes into an escrow account basically and sits there. So you got to get the money back.
Imagine telling your yacht club buddies that you sponsored a SPAC and you lost money at it. I mean, you'd look kind of stupid. That would be
definitely would.
funny. All right.
But yeah, these the earlier ones were they were private companies that wanted to go public quickly.
Yeah.
And it was a great time for them.
And we're
to go
very
public.
viable. Yeah.
And we're very viable.
Yeah.
QuantumScape would have been viable as a traditional IPO.
Absolutely.
It didn't have to do a SPAC.
Nope.
It could have done a direct listing. It could have done a traditional IPO.
I love the direct listings too.
Mm-hmm.
I hate that insider stuff where preferred clientele, get the IPO price and everybody else gets shafted.
IPO price is $40, but the first
Trade is like
shares trade
70.
is 120.
I know,
Yeah,
man.
exactly.
It's just nuts.
No,
Absolutely nuts.
definitely not. So no, I think that's a good lineup for you there. You've got Spotify,
Yeah.
QuantumScape, and Qualcomm.
Well, you lost, so I'm gonna change it.
Yeah, exactly. If
Just
I think it's a
kidding.
good lineup, it must be terrible. You're probably gonna lose. I think
Like
it's a
I
great
said-
lineup for me to beat you with.
Like I said, I am not a nice person. I am not gracious.
So we're
not a
coming
good winner.
back. We're coming back to me. Now I get to pick a replacement. That's okay. You should be proud of that performance last month, Brit. That's a good one. You could definitely brag about that.
Thank you.
And so now we're going. I've got to replace Twilio, and I also had Dick's Sporting Goods in there last month. And you know what, man? I'll tell you what. It's funny because I had two decimal point gains, where I was up like 0.5% and 0.7%.
Okay.
It was Dick's and Albemarle. Both of them got dividends last month. So I feel like the dividends are what saved me on them.
I mean,
And,
kind of why you
it's
get
a
dividends,
good show
right?
for why we get dividends.
Absolutely.
So I've got to replace Twilio and Dick's Sporting Goods, and I have quite a lineup of stocks to choose.
Oh, which is basically all of them. If you get 20, never mind. I can't do the math.
I've got tons of them. Just tons of them to choose from. And wow, man, we did have some really good runners last month. I mean, look at Maxar went up 40% last month.
I know. And I thought you had it. I really started
I
sweating
thought
it.
about taking it. I'm pretty sure I dropped it last month like an idiot. That's a
That
dumb
happens.
move on my part.
Yeah, you can't always get everything, 100% right. I mean, I could have taken Maxar and I didn't. That would have been just rubbing your face in it.
Keeping Qualcomm. You know what? I think I might put Scott's back in. I'm gonna put Scott's back in.
Okay.
Scott's Miracle Grow. It's a good value stock. So if people are a little bit afraid of high flying tech and maybe afraid of interest rates going up, that would be a good place to put money. As Brit said, earnings season coming up. This is a good quarter for Scott's. Typically, this is like their big
Right.
quarter that they're going to be
Right.
reporting. So. And we've also got Hawthorne, which is contributing very meaningful revenue at this point.
Absolutely,
So
yes.
I'm going to add Scott's. We're going to
Okay.
go with Scott's Miracle Grow for my
like
first
it.
replacement.
I like it.
And then that brings it back to you for your first replacement pick there.
Oh, you don't do both? Oh, that's right.
No.
Now we alternate.
You
See,
chose there.
like I said, we need the review. I never know how this stupid
Right.
thing works, ever. Sad. You know what? I am going to go Cornholio and take Bung. I think it's Bung, so I don't think it's actually Bung. But yes, I'm going to take our,
DG,
what was that, May? That was the May
yeah.
feature recommendation?
Mm-hmm.
Because I think that that kind of materials idea is going to be in play. I do think you're going to get some rotation, especially kind of like out of tech this earnings quarter, this earnings season, and so yeah, I'm gonna lighten up on the aggressive tech plays.
Okay.
And I'm gonna do that with my next one too. So
Okay, very
just
interesting.
to give you a little hint, try to help you out a little bit.
Appreciate that. I appreciate. I thought because you told me that you were thinking about taking Bung earlier today,
I did.
and I actually was just looking at it and thinking, man, that's a really nice one, but I can't take that. Britt told me he was.
Because you thought I was trying to trick you into taking it. Right?
No. I don't think that way.
I would, but I would really. Well, then I will actually start doing that.
Britt's gonna start to get sneaky on me. Okay, so your first replacement is gonna be Bung. I think
Yeah.
that's solid. I was definitely thinking about that one. You know what's really surprised me is NXPI. You would think that with a chip shortage and one of the only companies that can make chips, that everybody needs, that they would
Right.
just be blowing things out of the water. Now, year to date, they're up 30%, which is definitely a good performance. But
that's
like
real
Dix
good.
is up 80% year to date.
And what's the PE on NXP? I bet it's like stupidly low. That Ford PE is probably like what, 17 or 18?
You know what? I'm not 100% sure, but I can definitely. I'm gonna find that
Can
out.
you look? I have to look at my phone, and I can't. I really can't.
That'll just throw everything off.
I
figure
barely
it out.
turn my phone on.
Computer's very slow here today. Their PE ratio is. Bleh. It's a blank box on the computer right now.
Yeah, all right. Don't worry about it. Don't worry about it. They are
no, I
perpetually
really-
like cheap, though. It seems to me.
And I really feel like there's a potential, what with their earnings season coming, that they could basically say like, hey, look, because there's such a limited supply of chips, we've been able to make a bunch more money than we usually make.
Right.
But at the same time, it is a tech stock. Let's see. Oh, here's their PE. PE 21.
Man, that was
So not low, but not too
That-
too
is
high.
that- that's
either for
trailing,
a
not
tech stock,
forward?
That's forward PE.
Oh, that's forward. Okay.
Yeah, that's the forward PE. You know what?
I don't.
Let's go out on a limb. We're gonna go with NXPI.
Okay.
That's gonna be my replacement. I really like it. I
didn't
feel
set
like
that
it
up
should have
or
gone
anything.
a lot. I know, right? I didn't bury that.
We're so surprised.
So yeah, we're gonna definitely go with NXPI. I really like it. It has surprised me that it hasn't rallied more than it has.
All right.
And so I'm gonna put that in. That'll sort of be my outlier there, since pretty much everything else over here is more consumer discretionary.
All right.
Let's see how it goes.
You've done it. And you know what? I am
bold
going
move,
to scroll down in the main portfolio to the third section, the real estate investment trust. And guess which one I'm going to take?
It's not going to be
Unit. I'm taking Unity because
that's a good one.
this stupid stock, it's been sitting between like 10 and 1050 for how long? It's like 6 months, right?
It has been a
is
while.
Forever.
It's definitely a spring that is coiling right there.
Exactly. That is exactly what I'm thinking. That it has consolidated for a very long time, and should be. Eventually, yes. And we've said this before that it's a matter of time for Unity, but I'm going to say that now's the time. At some point, this market's going to have to start valuing dividends again. I mean, you remember, and we've made this point before too, coming out of the financial crisis, the hunt for yield was, it was very, very important.
And REITs have been one of the best performing sector this year. You know?
Oh, have they really?
Yeah,
At this point,
really been
nice.
doing well.
Well, there you go.
Uh-huh.
I mean, and you talk about companies that will benefit from some inflation. I mean, obviously, they'll take a little bit of a hit because of the raising money thing, but the value of their assets will go up.
Yep. And those are hard assets. Those are real assets.
Right.
You know.
Right. So yeah, I'm gonna take Unity as my fifth and final play, and really move out of the aggressive tech a little bit, and
But no, I really like that. I think Unity is great as a 5G play too. Because,
absolutely.
The tower REITs have gotten tons and tons and tons of focus, but people are really just sort of starting to come around to the fact that the 5G network, it does require those towers, but what it needs more than towers is it needs the fiber networks that Unity has.
Right. It's a different model.
Yeah,
It's a different
it really is.
infrastructure model for sure. So yeah, I think Unity's time will come because I'm still amazed that we're like halfway through 2021 and 5G still really isn't even a story. I mean, it's remarkable.
Yeah.
I mean, I guess the pandemic kind of overshadowed it, and then the interest rate scenario and the and the strength of growth. But I mean, it's still one of the most viable after probably electric cars, the emergence of EVs. It's probably the strongest
maybe even
investment
before.
story. Yeah,
honestly, maybe even before electric vehicles, because I think adoption of 5G is going to be much faster.
Well, it has to be because they're going to cut off your old one.
Exactly.
Yeah.
Actually, we
like,
recently
sorry.
reached out to Verizon is offering free 5G phones to everybody.
What?
And my girlfriend's provider reached out to her and basically said, like, your phone's not going to work anymore. You have to get a new one that has a 5G
they threatened
chip.
her?
Yeah.
I would not stand for that.
Well, they're going to buy her old phone back from her, like, at a premium.
Really?
Yeah. But, like, they're basically saying, and that's Sprint, or T-Mobile, or whichever, Sprint. Sprint bought T-Mobile bought Sprint, so that's T-Mobile.
T-Sprint, I think.
Yeah, we'll call them T-Sprint.
Or
Sprint
Sprinty.
Mobile. Sprint Mobile.
Sprinty.
But whichever company that is now, I'm pretty sure it's T-Mobile still. Yeah. They're basically saying, like, if you don't have a 5G phone, you're not going to have a phone.
Wow.
So I think that's going to be adopted a lot faster than electric vehicles.
And
It's going
that's
to take me a while before I trade in my Jeep for an
That's
EV.
great John Lagarde marketing, too. The CEO for T-Mobile. That guy,
He's good.
rockstar CEO. If he was the CEO of Twitter, that would be like a $200 stock. Everybody would use Twitter. But, like, I mean, what is... Yeah, anyway, I'm not going to rail on current CEO of Twitter, because I can't... he drives me crazy.
Be a little bit, too. But that's for another time. So we've got all of our stocks, right?
I think so.
We've got them all out. We've kept you guys here for a while. I apologize for that. I'm talking to our filming crew, by the way. In case you guys, I'm not apologizing
Well, we
to
know
you
our
out
viewers
there.
are
I hope
laughing.
you guys really enjoyed the
they're
time
having
that
a
we've
great
had
time.
you here. But I mean, if you didn't, I apologize for
They're
that.
having a
too.
great time.
But so we've got our stocks. I've got my keepers are Albemarle Innovative Industrial Properties and Chewy, and I'm adding Scott's Miracle Grow and NXP Semiconductors to fill out my top 5.
Perfect. I added Unity and Bunge, and I kept... See if I can get this right. QuantumScape, Qualcomm, and Spotify.
Got it.
Love it.
Nailed
I actually
'em.
rememred 5 things, Jason.
I'm proud
It's
of
like a
you.
landmark. We got to remember
I'm
this.
proud of- I'm so
The
proud
July
of you.
2021
So proud.
Wealth Advisory.
We're going to write this down. All right.
All right. Well, thanks for tuning in. Those are our picks for the next month. And thanks for tuning in. And we'll see you in August.
Make sure to subscribe to our YouTube channel. Click the bell to be notified of new videos and like our videos when they come up. Thanks again.